So now in the past, I've done this quick trip around the world at the end. I moved it forward this time because I want to focus on a few high-level issues that are impacting your businesses internationally and the global economy as a whole. And I'll just go through them all right here. The first one is what we call a crisis of confidence. Now, outside of the United States, we had seen business and investor confidence falling significantly in most major economies in recent months, almost across the board. But consumer confidence levels had remained pretty high during that period. But what we've seen since the fall is a significant decline in consumer confidence in many key countries as well. And that's concerning because we can the economy can prosper if business and investor confidence is low if consumers keep spending, or vice versa. But if all three of them are lacking in confidence, that is a very worrying sign that right now we're seeing a steady trend in lower business confidence, lower investor confidence, and lower consumer confidence in many of the world's most important markets right now. That lack of confidence has led to this volatility that we've seen on markets in recent weeks. Now, the 20% decline in the U.S. share prices was mirrored in China. We've seen declines in many major economies. Now, we've seen a bounce back in recent weeks, but we're expecting a lot of poor economic results to start filtering out. Some of them started coming out yesterday out of Europe. We're going to see some more going forward. We expect that to have some impact. And one period we're specifically looking at is March. And there are two big events right now in March. One of them is the potential for a total mess with this Brexit issue in Europe, and the other is the truce in the trade war between the US and China is set to expire in early March, and I'll talk a little bit about that later. So March, we could see another period of significant volatility. So what happens when markets are volatile and investors get scared? They run for safe haven investments. And what is safe haven investment? Number one, it's still the US dollar. And if you look, again, I've shown this chart for many years, just changed the data, of course. The chart on the top shows the change in currency's value against the US dollar since the beginning of last year. And there you can see, with the exception of the yen, which is also a safe haven currency, and the peso because of the trade deal agreement, every other major currency in the world declined by at least 5% against the US dollar. Again, that makes it a little more difficult for exporters to do business. But we are in the midst of what is a prolonged cycle of dollar strength. And if you look at the chart on the bottom, that's the value of those currencies against the dollar since the beginning of January 2014. And look at how far a lot of our major trading partners' currencies have fallen. The euro, 22% down against the dollar. The Canadian dollar, 31% down against the US dollar. The Mexican peso, over 50% down against the US dollar. This makes it very difficult for exporters to be competitive in a lot of these markets. The one currency which has held a lot of its value, in fact, is the Chinese yuan. We talk a lot about currency manipulation in China, but their currency has actually performed pretty well in recent years. Now, that is a weapon at their disposal should they choose to try and export their way out of this slump. They could allow the currency to depreciate. But right now, the yuan has done relatively well. Commodity prices, we're not forecasting any major increase in commodity prices in the coming months. Now, of course, a conflict between Saudi Arabia and Iran or something like that would lead to a spike in oil and gas prices. But right now, demand levels appear to be weakening. Supply levels remain pretty robust. So we're not forecasting any major increase in the price of oil, the price of gas, or the price of many other minerals going forward. I mentioned the demographic changes, and these are really important long-term issues. And the chart on top is interesting. That shows the birth rate in the United States. And one of our advantages here in the US is that we always had a birth rate, not always, but for the most part, had a birth rate that was higher than most other developed and large economies. That we were producing future consumers and future workers and future business owners at a relatively high rate. The birth rate since the financial crisis has steadily fallen. And in fact, the birth rate fell to a 40-year low last year. So we talk about these labor shortages here in the United States, but if you look, who's entering the labor market? It's still that generation where the birth rate was pretty high. What's going to happen in 10 or 12 years or 14 years when these people in this low birth rate period start to become 16, 18, 20, 21, start entering the workforce, start going to university? It's going to become even tighter. We're going to be ever more reliant upon automation to produce our goods and to take care of our services. And it's not just the United States. We have low birth rates in most developed parts of the world now, and even in many emerging markets in places like Asia and in Latin America. China, they got rid of the one-child policy about 18 months ago in a bid to boost the birth rate. It's done absolutely nothing. We've seen in some countries now the birth rate fall below 1, which is basically the average woman has just 1 baby in her lifetime. And the replacement rate is 2.1. If the average woman in your country has 2.1 babies and your migration level is 0, your population will hold steady. But we're seeing the birth rate fall well below that in many parts of the world, and that's a major long-term challenge. That's one of the reasons why those growth rates in developed economies consistently are falling. And we're not seeing the productivity increases needed to offset the declining demographic situation. So, of course, there are parts of the world where the population is still growing, and unfortunately, they're usually the poorest parts of the world, or the parts of the world that have the least amount of arable land or least amount of water, and that's leading to this overwhelmingly emotive issue of migration. Now, here in the United States, of course, there's all the controversy about building a wall and about migration coming in from the south. It's important to note that Latin America's population growth is also falling significantly, and in fact, we don't see that many long-term population pressures here in the United States from Latin America. In contrast, there are parts of the world like Europe and the rich countries of the Middle East which have regions like sub-Saharan Africa and the poorer countries of the Middle East and Central Asia surrounding them, where population growth continues. The average woman in some countries is having 5 or 6 babies in these places, and there are no jobs being created. There's very little arable land. There's no water. So there is the real immigration pressure going forward, and that's going to remain a very important political issue. We see it. It's not just here in the United States. We monitor every election in the world. If you would have asked the question 10 years ago, rank your most important issues when you vote, migration wouldn't have been in the top 10. It's in the top 2 everywhere now. It is an issue that is being used by politicians on the right and left to further their agenda, and it's become a very important issue. One thing we're looking at as well is what we call the battle for technological supremacy. There is a Cold War underway between the United States and China for domination of many of the most important high-growth, high-tech industries, whether it be artificial intelligence, whether it be software, whether it be biotechnology, et cetera. There is a huge amount of investment in China right now going into firms to compete with what are now the U.S. leaders in many of those sectors. This is something we're watching closely. The rest of the world is watching with trepidation as these two countries do battle. But for the U.S., it is a significant challenge, because why has the U.S. done better than a lot of the other rich countries in recent years? It's because the U.S. has such a strong position in so many high-tech, high-growth industries.